Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from CIBC Wood Gundy tells us the Shanghai stock market has been sky high. Jeff Rubin, author of the new book, The Carbon Bubble, What Happens When It Bursts, talks about Canada's over-reliance on oil revenues and how important water will become because of climate change. We'll talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. Welcome to This Week in Money, Ross.
Nice to be with you, Jim.
Well, we'll take a look at what's happening with currencies first. How is the old Canuck buck doing?
Well, the Canuck buck, which had been a pretty good leader off the bottom in the last couple of months, ran out of steam this week, and we'd gotten a little overbought at the end of the previous week, started to see some signals that we generally see as you create a rolling top. Well, this one rolled a lot faster than I think most of us were looking for. The dollar had been up about 7% in total off the bottom, probably had a 2.5% week to the downside as of this week. And looks as though we may have seen the best for the dollar rally. Typically, in the bear markets, you will get these corrective rallies that will take the better part of a month and a half to 2 months, which is what this one has had, and then they start to reassert themselves to the downside as soon as they've got some reasonable overbought ratings. You don't need dramatic ones. Once you're in a downtrend, you just need to get mildly overbought and get the roll. So the typical action would be, and looking at the bear markets of the 1980s and then the mid to late 1990s, which is what this one has the appearance of, you'd get a hard first week down like we've had, get a recovery that would fall short of the high, and then start your next bigger leg to the downside. So I'd originally been hoping that we would get it somewhere up around the 85 to 85.5 cent range against the U.S. That appears to probably not be in the cards at this point. I think more around that 83.25 level is the best that we'll end up looking at.
How are gold and silver looking?
Well, gold and silver had a great week the week before. They popped out on the upside, testing resistance levels, but they were through the resistance lines. And the key that we were looking for was that on a pullback into this week, that they would have to hold around the levels of the preceding week. So that was roughly $1,200 for gold, and that's what we ended up with. I think 1201 was the low for the week, 1205 for the closing price. These things are trying to show some strength, and I think if we look at them on a relative basis to what's happened to other markets this week, you can see that internally they're not looking too bad. You had, let's say, a big move in the currencies. The Canadian dollar we mentioned being down like it was. U.S. dollar had a great week to the upside, and at the tail end of the week, Thursday, Friday, put on some really good action, and the gold market, silver markets were able to hold their own at that point. So we can see that the normally this inverse relationship of dollar to gold, you would have looked for a weaker precious metals market than we saw at the tail end of the week. So it would show that there's buoyancy there. I think looking forward, probably one of the attractive looking relationships here would be to be long the precious metals and short the euro for the next couple of months. That probably is a nice pairs trade to have on.
What kind of an impact would it have if China, as rumored, might go to a gold standard in October?
Well, that's then you can get a spike up in the gold market. You'd probably get a bit of a hit in the U.S. dollar, but you'd get a hit on all the currencies. I don't. At this point, October is so far out on the horizon. I'd prefer to let the let us go through the summer and see how the stories start to resolve over a period of time.
How are the high techs doing, or biotechs?
Well, they were the real high flyers from the last 2 years. Most of them peaked out here momentum-wise in February, March, and they're going through a pausing phase. You got the same thing in the healthcare sector. Most of the real strong sectors that we had seen went by the wayside. Really, at this point, the only emerging area that seems to be trying to carry the market a bit, or over into the U.S. financials, the J.P. Morgans, the Chases, Goldman Sachs. Those type of stocks are where you're seeing some new highs, but not a lot else in terms of the U.S. market. The hottest market in the world these days is back in Shanghai. That had the big run into 2 months ago, to the point where we talked about how there weren't enough investment advisors to open accounts for the rush of new investors that were out there. So there was a quick reaction, about a 10% pullback in the Shanghai index there 3 weeks ago. It's managed to turn and put on new highs again. From just a pattern perspective, and looking at the way the market had that big boom back in 2000, then the bust, 2007, then the bust for the next year and a half, and the base up until last year. That sort of boom, bust, and now rebuilding of a bull market. This leg in the bull probably hasn't got too much left in it in terms of price and time. Before we get a correction that's probably bigger than the 10%er that we saw.
Is there any particular sector that's going strongly in Shanghai?
Well, there had been some strong ones. The solar stocks have been doing famously, and they took it a little bit on the nose. I haven't been tracking any other individual stocks in sectors there, more just taking a look at the broad market.
Ross, thanks a lot for chatting with us.
It's always a pleasure.
My guest has been Ross Clark, Investment Advisor at CIBC Wood Gundy in Vancouver. If you'd like to contact Ross for any investment advice, his email, ross.clark@cibc.ca. Coming up next on This Week in Money, Jeff Rubin.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Jeff Rubin. He's talking to us from Toronto. He's the author of the new Random House book, The Carbon Bubble, What Happens to Us When It Bursts. His website is jeffrubinsmallerworld.com. Welcome to This Week in Money, Jeff.
Glad to be here.
Well, first off, I guess I have to ask, what is the carbon bubble?
Well, a bubble, as you know, we've had all kinds of bubbles in our economy in the last 10 or 15 years. We've lived through the dot-com bubble, the subprime mortgage bubble, and now the carbon bubble. And I guess bubbles, the one common denominator is that they're all based on some initial premise that turns out to be false. And in the case of the IT bubble, it was that IT sales could continue to grow indefinitely at exponential rates. In the case of the subprime mortgage bubble, it was that, financial instruments that were based on the mortgage payments of unemployed homeowners should be as creditworthy as the government of Canada or a U.S. Treasury bond. And in the case of the carbon bubble, it's really the notion that we can consume and combust as much carbon as we possibly can, carbon fuels. I think, in the last 10 years, we've discovered that there's an economic constraint in that, over the last 10 years that we've had the deepest post-war recession and the most anemic recovery, so that sort of the triple-digit oil prices that we've needed to develop resources like the oil sands at the same time kills economic growth and the demand for oil, and that's certainly part of the story of why oil prices have fallen so much. But I guess the bigger challenge going forward is limit to what we can emit in the atmosphere. The scientific community says there is a limit, 450 parts per million. We're already at 400, and we're going to be approaching that limit very quickly, and that's going to require a very material reduction in the rate at which we burn fuels like coal and oil. And of course, if that's the case, then that has some pretty significant implications for what happens to coal and oil stocks. And, in the case of coal, we've already seen about a 90% collapse in the valuations of major American coal stocks like Peabody Energy or Arch Coal or Alpha Resources. And in the case of Canada, we've seen almost as large, not quite as large, but about a 70% decline in, for example, the BlackRock's oil sands iShares, which captures all the TSX-listed oil sand producers. As I say, in the last 3 to 4 years, we've lost about 70% of the share value there.
And of course, that's driven a whole big hole in the Canadian economy. Alberta accounts for 50% of Canada's economy?
Well, Alberta's probably more like about 15%, but where it does really create a big hole is in the TSX, because a lot of people go, I don't own any Suncor, Cenovus, Canadian Natural Resources, Imperial Oil, whatever, but in fact, most people today own an index. Like, you can buy the TSX Composite through exchange-traded funds, but when you buy the TSX Composite, you own a lot of oil sand stocks, because the energy sector, next to the financial sector, is the largest segment of the TSX Composite. And certainly that big decline in share value of oil sand stocks over the last 2 to 3 years has been an albatross on the index, and has certainly been a drag on the returns you would have got from the TSX Composite.
Is it a case of Canada relying too much on the oil patch?
Yes. I mean, it's a case of us leveraging ourselves in a way that we've seldom done before on one resource that turns out to be the wrong resource. I mean, this is the resource that Prime Minister Harper said was going to be the engine of economic growth and was going to turn Canada into an energy superpower. And it's pretty well been a resource that for the last 5 to 6 years has been championed by the business press, and even today continues to be championed by the business press. So this is a major wrong turn. It's not just a major wrong turn, but of course, because we've championed a resource that is very vulnerable to climate change, we've really, or at least the federal government, has been in denial of climate change, and therein lies costs, because I think what we fail to recognize is the economic opportunities that climate change would bring to a high-latitude country like Canada. It's certainly going to devalue our hydrocarbon resources. Much of the bitumen is going to stay in the ground, but at the same time, other resources, particularly our freshwater supply and our arable land, are going to become a lot more valuable.
So what happens when the so-called carbon bubble bursts?
Well, I mentioned in writing the book that I had to spend a considerable time just updating tenses, because many of the things that I was writing that would happen were happening while I was writing it. I point out that oil sand stocks have lost about 70% of their share value since early 2011, but I think when this bubble is finally over, that oil sand stocks aren't going to do much better than U.S. coal stocks that have been essentially totally wiped out. What it means for the national economy is that Alberta, which has been leading the country in economic growth and has been increasing its share of Canada's GDP, is now probably the weakest part of the Canadian economy. They're already in a recession, and they've got, a huge budgetary deficit. So for them, they're on the front lines of a burst carbon bubble, as they have been in the past.
Well, first they called it global warming, now they call it climate change. If you take a look at the weather with the Earth's history, it seems we have about 100,000 years of extreme cold and then about 10,000 years or so of warm. What is the climate change issue? Is it a big boon for business, or is it just an excuse for governments to put more taxes on us?
Okay, well, I mean, there's certainly an element of the latter, but before talking about that, like, for example, the recent move by Ontario Kathleen Wynne, let's just talk about the bigger issue of, what is the scientific community predicting, and not in the next 10,000 years, but in the next 30 to 40 years. The Canadian prairies has been identified as a climate change hot zone. By that I mean an area of the planet where we will see temperatures rise at a multiple of the global average. They have already risen about over 1.5 degrees Celsius since we started measuring temperatures in 1895. But meteorologists are forecasting now that, we're going to see an accelerated warming on the prairies. I mentioned earlier in our conversation that, the northern prairies, the Peace River, which is really the northern margin of agriculture, could see as much as another 3 degrees Celsius warming. Southern prairies, 2 degrees. That translates into another 2 to 3 weeks in growing seasons, and growing seasons are already over 2 weeks longer than they were 50 years ago. The significance of that is that, of course, the longer the growing season has a huge impact on crop yields, and also changes the type of crops that you can grow. The growing season on the prairies, for example, has never been long enough for corn, but that's starting to change. We're seeing more and more prairie farmers starting to plant corn, and indeed, that hasn't been lost on seed companies like Monsanto or DuPont Pioneer that have been holding seminars in prairie farming communities showing wheat farmers how they might soon be able to grow corn.
One of the negatives, though, I know because I'm from Peace River. My parents' well used to be 15 feet down. Now they've drilled 100 feet down and they can't find water.
Right, and that's not just the Peace River. It's an even more acute problem in the South Saskatchewan basin. Unfortunately, the same climatic changes that are going to raise average temperatures on the prairie is going to make the prairies, which is already the driest region of Canada, even drier. I mean, the ice pack on the Rockies is shrinking, and that means that the spring runoffs are going to become smaller and smaller, and that process is going to accelerate in the decades ahead. So I guess the issue is going to be to try to divert water to where it is needed. Canada has, depending on your definition, anywhere between 7 to 20% of the world's fresh water supply, but unfortunately over half of it flows into the Arctic and Hudson Bay, and the Peace River and the Athabasca would be examples of that. The water ultimately flows up the Mackenzie River to the Arctic. I think the big environmental issue in the decades ahead won't be pipelines and oil, it will be interbasin water transfers. In other words, diverting where water flows. And I think that prairie farmers are going to want to see more of the flow of rivers like the Peace and the Athabasca, instead of going out to the Arctic, being diverted down to the southern prairies where it will be needed.
Our guest is Jeff Rubin, the author of the brand new book, The Carbon Bubble: What Happens to Us When It Bursts. Well, our government's going to use climate change as an excuse to boost taxes. I can say in BC we've had a carbon tax for a long time, and I haven't seen it cut back in the use of gasoline at all.
Well, it certainly wasn't a tax increase because it was offset by a cut in personal income taxes. But what is a covert tax increase are the cap and trade systems that we're seeing introduced in Quebec and now being introduced in Ontario. And, those systems are really ways of generating new government revenue and painting it in greenwash. The cap and trade systems that are being contemplated were already in effect in Quebec and soon to be implemented in Ontario. They have a very low price on carbon, something in the neighborhood of, I think Quebec's is $10 to $12 a ton. That's not going to make a discernible difference at the pumps, and certainly not a discernible difference in terms of how much gasoline you use, but it is going to raise an extra couple of $2 billion in revenue. And unlike the BC carbon tax, which is offset by a personal income tax cut, in Quebec and Ontario, there will be no offset, so this will be a tax increase by any other name. And, those kind of moves, play into the Harper cynicism where the Prime Minister would say that, all of these are simply revenue-grabbing ways. And in this particular case, I would have to agree with them that what we really need to do is shift the tax base from income to carbon, so that instead of taxing personal income, we're taxing combustion of carbon fuels. That's not a tax grab, that's a shift in the tax base. It's a tax grab when we impose those kinds of cap and trade prices and don't provide any offsetting cut in personal income tax, which is what's happening, unfortunately, in Ontario and Quebec.
Well, Canada as a whole really doesn't produce that much in terms of carbon, though, does it? I mean, China's got over 300 cities of over 1 million people. Canada altogether has a population smaller than California.
That's right. Although, the brakes are being slammed on China's carbon consumption in a pretty dramatic way. I mean, if you look at coal prices, they've fallen even more than oil prices. Thermal coal prices have fallen from over $140 a ton to around $60 a ton, and that's principally because China. I mean, China single-handedly combusted 4 billion tons of coal, which is half of all the coal combusted on the planet. So when all of a sudden Chinese coal consumption slows down or falls, that casts a huge imprint on coal firms from British Columbia to Australia. Many investors in coal stocks felt that they were secure from any kind of global agreement on carbon emissions, but what they didn't realize was that individual countries, like China, for example, has taken unilateral action. I mean, it's closed down coal-fired generating plants. It's done that because of air conditions that are just appalling in its, principal cities like Beijing and Shanghai, and that's had a huge implication on the performance of coal stocks. And I think there's a very poignant lesson for oil as well. So, I mean, you're right, Canada's carbon emissions aren't large relative to economies like China, but nevertheless, measures that China takes to reduce its carbon emissions can have a huge impact on Canada's oil industry, just as it's had a huge impact on the coal industry.
Long term, in your book, you talk about the price of oil going lower. Is that due to slowing demand or overproduction?
Well, I mean, there's a couple of things. If you look at what will be required in terms of stabilizing greenhouse gas levels in the atmosphere, the International Energy Agency has modeled what that would mean for oil and coal consumption going forward, and those are very different demand forecasts than the ones embedded in the business plans of oil and coal firms, because, we're going to need to cut coal consumption by over 30% in the next 15 years, and oil demand would probably peak in the next 4 to 5 years and then fall by 15%. Well, if that's the case, then obviously coal and oil prices are going even lower, and the problem for Canada's oil sands isn't so much that they're more emission intensive, it's that they're the highest cost oil in the world, and hence the most vulnerable to these falling prices, because at those kind of prices, and even at today's prices, the oil sands don't make a whole lot of economic sense.
What about Shell having a giant oil rig platform all set to go to the Arctic out of Seattle, where protesters have surrounded it?
Well,
is there a need to go to the Arctic?
There's no need to go to the Arctic because, in a world where we're going to be consuming less oil, we're not going to be getting oil from the Arctic because it's way too expensive. We're not going to get oil from the oil sands. You probably won't even get oil from the fracked shale formations like the Bakken in North Dakota. The last person standing here is going to be OPEC, Saudi Arabia, because they're the cheapest producers of oil. And if oil demand falls and oil prices fall with it, they're the only people who are going to be able to make money producing oil.
What about BC's future and other prairie provinces who produce a lot of natural gas? Is that the energy of the future?
I'm not sure that nat gas is going to be the energy of the future, particularly not the nat gas that comes from fracked shale formations. The environmental goalposts on fracking may move as dramatically as they've moved on coal in both the United States and China. The fugitive emissions from fracking shale formations renders the gas that comes out of that almost as emission intensive as coal. Where there may be a future is there may be another win for hydro, because, I mean, what's hurt hydro exports to the United States, whether we're talking about BC or whether we're talking about Quebec, is really shale gas and how much cheaper it is to produce electricity from burning natural gas now that fracking has brought down the price of natural gas so much. However, if the environmental goalposts move against fracking for gas, as they've already moved for coal, there may yet be opportunities to export hydropower to the United States, and the two provinces that would be in the biggest, or the three provinces that would be in the biggest position to benefit from that would be Quebec, Manitoba, and British Columbia.
With China's slowing economy, is Canada's plan to export energy to it kind of dead?
Yes. I mean, I think from oil sands to LNG terminals. I mean, BC and many U.S. states are hoping to export LNG to China, but what we've seen is with the Russia Accord that China can access much cheaper gas from West Siberian gas wells that would probably provide gas at anywhere from $4 to $5 per million BTU cheaper than LNG. So I think that just as we once dreamt of exporting a lot of bitumen to China, I think that our dreams of exporting LNG aren't going to likely be any more fruitful.
We're speaking with Jeff Rubin. He's the author of the brand new book, The Carbon Bubble, What Happens to Us When It Bursts. What about food production? What's this going to do to Canadian producers? Is Canada's future going to be the breadbasket of the world, as we used to call ourselves?
I think so, and I think, ironically, the Prime Minister might be right in thinking that the West will be the locomotive of national economic growth, but it's not going to be bitumen from the oil sands. It's going to be food from the prairies. And if you look at what sector has maintained its pricing power over the last 3 to 4 years, because virtually everything in the commodity sector, from oil to copper to iron, has plunged in value, it's food prices. And if we look at how climate change is likely to impact agriculture, it's likely to create even greater pressures on food prices, because while climate change will tremendously increase the agricultural potential of high latitude places like the Canadian prairies, it will have the exact opposite effect on bread baskets like, for example, the U.S. Corn Belt. You raise the thermostat 3 to 4 degrees there, and you're not talking about enhanced crop yields, you're talking about drought. And to the extent that agricultural production is hampered in places like the U.S., the more valuable it'll be where in northern latitudes you can grow it. So I think that we have a much better chance of becoming a breadbasket than an energy superpower. Now, Canada has always been, a significant agricultural exporter. We're probably about 8th or 9th in the world today. But I think, with the changing climate, we could be possibly even in the top 3. And with the changing climate, I think that grain will have a lot more pricing power than oil.
What about farmland in Canada? Is it in a bubble of its own, or is it something that you should hold on to?
I think it's something that you should own, although that's easier said than done. Very few people are in a position to buy a farm and provide their own sweat equity to grow crops. There are farmland funds. They're typically closed-end funds that buy the farm and then lease it back to the farmer who continues to operate it. Where you're seeing the most of investment in farmland, however, is coming from the institutional side, from pension funds. The Canadian Pension Plan Investment Board bought Assiniboia farmland and acquired hundreds of thousands of acres of farmland. Saudi wealth funds are buying into farmland. Now, in some places like Saskatchewan, for example, there's now a moratorium on institutions buying farmland, and I guess that really reflects a schism within the farm community. If you're a farmer looking to cash out, then you're all for the Canadian Pension Plan Investment Board buying your land. But alternatively, if you're a farmer who wants to expand his production and wants to buy farmland, you'd rather not compete with $230 billion pension funds.
Are GMO products more expensive to produce than organic products, and why?
Well, I don't know. It depends what you call GMO. I mean, what we call corn today, that's a GMO product. That's a so-called Frankenstein food. It bears no resemblance to, the natural state of maize. But, I think what we're going to see is a continual evolution of agriculture. And I guess, the challenge for seed companies like Monsanto is to engineer seed varieties that are going to be adaptive to climate change and particularly adaptive to water stresses that are part and parcel of the climate change coming to the prairies.
Is water Canada's biggest asset?
Absolutely. And, warming temperatures are fine in themselves, but without water, nothing grows. Saudi Arabia has very warm temperatures, but it's not an agricultural producer. Actually, it actually tried to become self-sufficient in wheat, but it used up about 80% of its aquifers, so it abandoned that, and instead it buys farmland in places like Sudan and Pakistan, and as I say, even took a position in the Canadian Wheat Board. Water is the key, and, while Canadians have always been against bulk water exports, we are a virtual exporter of water. It takes 1,500 liters of water to raise a kilogram of wheat. So when you're exporting wheat, what you're really doing is exporting highly processed water. And I think in that sense, we will be a water exporter. Again, not bulk water exports, but as a major grain exporter, what we're really doing is exporting highly processed water.
What do you see going ahead for hydro and solar power?
Well, good things, obviously. The more there are restrictions on the combustion of fossil fuels, whether that's oil, whether that's nat gas, or whether that's coal, obviously it provides greater and greater opportunities for other forms of energy. Up until the Fukushima disaster in Japan, nuclear was likely to be the biggest beneficiary, but post-Fukushima, other than India, China, and South Korea, nobody's particularly interested in pursuing that route. So wind and solar are certainly huge beneficiaries. Some countries like Germany and Spain, over 25% of the power in the grid now comes from renewables. Hydro is certainly, an area that would benefit from in a carbon-constrained world. Now, not every country in the world has available untapped hydro, but Canada certainly still does, and again, I say we may have another opportunity to export large amounts of hydropower to the United States if the environmental goalposts move on shale gas.
Going back to the issue of the safety of GMO products, would you prefer to eat GMO or organic foods? Or do you have a choice nowadays?
I suppose you do have a choice, but whether it's organic or whether it's GMO, I think that with the changes in temperature and growing season, that Canada would be a much bigger producer of both.
Could you see higher interest rates causing the carbon bubble to burst?
Well, I don't think higher interest rates are causing the carbon bubble to burst. I think I say two things. One, the economic constraint that, the very high oil prices that are needed to develop high-cost resources like the Alberta oil sands turn out to be the same prices that have very negative impacts on global economic growth and hence the demand for oil. It's not a coincidence that since the advent of triple-digit oil prices, we had the deepest post-war recession on record and have had the most anemic recovery on record. I think over a decade of experience underlines the fact that these triple-digit oil prices, it's very difficult to sustain demand. And as we were talking earlier, the environmental constraint that, we're rapidly approaching what the world scientific community says is as much carbon in the atmosphere as we dare have. And, that frontier is getting closer and closer, and as it does, we're seeing more and more actions taken. Maybe not coordinated global actions, but certainly actions by individual countries. For example, in the United States, with the new standards from the EPA, it's going to be virtually impossible to build a new coal-fired power plant.
Do you see the Arctic as a great new transportation route as the ice loosens up, or is it going to be a future war zone?
Well, it's just as planes fly over the polar caps to cut down on distance and fuel costs, the same will be true of shipping. We've already seen some landmark events. A couple of years ago, we saw a Finnish freighter, the Nordic Orient, go from Vancouver to Finland through the fabled Northwest Passage. A couple months before, a Chinese freighter went from China to Rotterdam along Russia's Arctic sea coast. These routes right now are only open maybe 2-3 months a year, but in 30 to 40 years, they may be open all year round. And that's why I think it's going to be really important to develop some infrastructure in the region. Russia, for example, has 14 deep water ports along its Arctic coastline. We have none. Our farthest, most northern port is Churchill, Manitoba on Hudson Bay, and that's about 2,000 kilometers south of the Northwest Passage. But I definitely think that, we're going to see a huge increase in shipping in that area because it would provide very significant savings to either going through the Panama Canal or the Suez Canal, depending on where you're routing things from. And it's going to be important to have a presence. Harper, I think, once made the quote, use it or lose it. Well, aside from the rhetoric, we haven't really put down much infrastructure in the region, and if we don't, we're obviously not going to be able to assert sovereignty in the region.
What about the futures of ports in Vancouver and Halifax? You won't have to ship things by rail to get things from Asia all the way over to Europe.
That's right. Right. No, I think it's going to have a huge, potential impact on shipping, and Canada will have 3 coasts from which to ship from instead of just 2. Again, part of the problem with denying climate change, and I know why the government would take that position because it's so injurious to the future of the oil sands if you think that we're running up against, a limit on how much oil we can combust. But I think, what we're missing here in our defense of the oil sands is really a lack of opportunity to explore what are the economic and commercial opportunities that climate change is going to bring. Because as I say, in Canada, Canada, we'll probably see as profound changes in climate as anywhere in the world, given that we're a high latitude country, and the higher the latitude you go, the bigger the temperature changes. Like you go up to the eastern Arctic, you're not talking about 2-degree changes, you're talking about 5-degree changes, which is why we're talking now about opening up shipping lanes that were once frozen.
I saw a study that once said that Canada probably could have the most opportunities from climate change simply because as the ice and snow is removed from the northern areas, you'll be able to find new resources to exploit.
That's true, and that's not only true of Canada, but that would be true of Greenland. That would be true of Siberia. That a lot of the resources have been inaccessible, and of course, it just won't be intercontinental shipping. I mean, the fact that we will have sea routes there will allow those resources to become more accessible. Resources like, iron ore deposits on Baffin Island. They were even talking about emerald deposits in Greenland. These things have been inaccessible. They've been buried under glaciers. Well, those glaciers may not be around in 30 years.
And we've already seen that in Alberta with the Columbia ice fields.
That's right, and that's happening on an even bigger scale the farther north you go, up into the Arctic. So I think that there's obviously going to be costs and adjustment, but I think there's a tremendous amount of commercial opportunity, and I believe that's what our government should be doing right now, is identifying the opportunities and trying to provide the infrastructure to take advantage of them.
If we stop spewing carbon at the rate we are right now, just stopped it completely, would that stop climate change?
Well, I think what the scientific community is saying is that we've already got at least another 1 degree, and I'm talking globally, coming down the pipe from what we've already emitted. But the hope is that we can stabilize carbon at 450 parts per million. We're a little bit over 400 now. We were about 280 at the time of the Industrial Revolution, and the hope is that if we can do that, we can hold global climate change to 2 degrees. But as I pointed out, when you talk about northern latitude countries like Canada, that 2-degree global average turns out to be more like 4 to 5 degrees the farther north you go. And as I say, that really changes the equation, the agricultural equation for what you can produce.
What will the cost be to Canada to protect our shorelines if the ocean rises?
Well, the ocean is going to be rising. There's no question about that. So, the question is going to become, are we going to have to move populations? And that's not just a Canadian issue. That's a global issue. When you think of how much of the world's population lies in coastal areas, it's a huge challenge. But there's no question that those melting glaciers that, we were just talking about, Baffin Island, Greenland, they're going to be in the ocean, and that's going to raise sea levels.
Should cities like Vancouver start building seawalls in anticipation of that?
Well, we're going to need to do that. Not everybody's going to be able to do it. Vancouver, yes, but probably Dakar in Bangladesh, no, because those things are expensive. But yeah, those are the kind of infrastructure things that we have to recognize, and that's the danger of denying climate change is that we don't start to take the measures we need to adapt and be successful.
And knowing that these things are likely to happen, should we start now? Because construction never gets cheaper.
Right. No, I would say we got to start right now, in the same way that, if we're going to really cut down on our carbon emissions, we got to start moving the tax base right now from income to carbon emissions. I think, the great misperception here is that even people who are willing to concede that climate change was happening think that it's a long-run problem that their great-grandchildren will need to address. And I think, what the scientific community is saying is, no, it's an immediate problem, and we need to start doing things now.
Jeff, how could someone get a copy of your book?
You could get a copy of my book really through any bookstore, and you could get a copy of it electronically as well.
Jeff, thanks a lot for chatting with us.
My pleasure. Take care.
My guest has been Jeff Rubin, author of the brand new Random House book, The Carbon Bubble, What Happens to Us When It Bursts. His website is jeffrubinsmallerworld.com. That wraps up the show for this week. Thanks to our guests, Ross Clark and Jeff Rubin, and thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. This show can be heard again on talkdigitalnetwork.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.